Hi everyone, it's Christine Kopr with Sotheby's Realty. Thanks so much for joining me for my April 2021 real estate market update. Okay, lots of information to share and I'm going to try to get through this really quickly, hopefully not too fast. If you have any questions, please reach out to me because there have been a lot of questions about what's going on in the real estate market. By far, March was one of the craziest months we've ever had. And I know we're talking about April, but we're just coming, from March into April, carrying on. March was unbelievable. We had the highest listings, so new listings on the market for the month of March. It was a record. And we also had the highest sales on record for the month of March. April is also hitting some records as well. And carrying over from what is going on in this marketplace. So as always, I like to share my screen with you to help put this all into perspective. So let me just make sure I'm a little bit bigger here so you guys can see me. Okay, as you know, I like to always share my, my graph here. I've been tracking this for quite some time and it really puts the real estate market into perspective. We are looking at the month of March here. So we had 4,908 sales in April. Okay, that is a 346% increase in sales year over year, as well as a decrease of 14% month over month. So you can see March hit it out of the park at 5,708. April came in very strong at 4,908. These are very big numbers for sales. April's sales were also 56% above the 10-year average, to put it into perspective, for the month of March, and as well as the highest on record for the month of March. So it is a record-breaking month of sales. Now let's talk about listings, because we're finally starting to see a little bit more inventory as we've started to feel a little bit of shift. Sellers starting to take advantage of the current marketplace. Prices have really changed year over year. There's been a lot of appreciation. And I think people are also getting a little bit more comfortable with COVID as well. So listings, there were 7,983 new listings in March, which was a 243% increase year over year. And it was down 4.2% month over month. So the total listings are up 9% year over year. But remember, last year we started, COVID had started already. So we're coming off a low base. And total listings are also up 12% month over month. Now, and one last thing is our current active listings are 11.2% below the 10-year average. So we have been sitting in this low inventory situation for quite some time now, and it's below our 10-year average. So I like to share this because this is an opportunity to explain supply and demand and the speed of the marketplace. So what we do is we take the current active listings divided by the number of sales, which gives us the current months of inventory. And you can see here that we're sitting at 2.1 months of inventory. Now remember, between 4 and 6 months of inventory is considered a balanced market. Anything at about 4 and below over a sustained period is considered a seller's market. And anything that's 6 months and above for a sustained period is considered a buyer's market. There's way more supply than there is buyers. And in this situation, we have not a lot of supply to meet the demands of all the buyers in the marketplace due to COVID, interest rates, and the buy demand that has always been there and never really went away. And we've been sitting in this seller's market for quite some time. And I'm going to scroll up and just go back to give you a point of reference. And then this is our benchmark price. So we're sitting at 1.152 is the benchmark. So you can see this, this trend. We started out in January of 1.056 and we're up 100 grand in the benchmark just since January. Incredible times for anyone in the real estate market. Now, this is great if you're already in the market, and if you're trying to get into the market, it means you need to have the know-how and skill how to execute. But so far, it means that if this trend continues on, you getting in the market is going to do well for you over the long term. Now let's put this back into perspective, because this 2020 was the year of COVID. You can see our sales were not nearly as high into, the 3,000s. It started towards the end of the year, but you can see earlier on in the year, we were sitting about 2,500 sales. COVID hit, things slowed down. You could see there was some accumulation of inventory because the sales slowed down and new listings kept coming on. But as we started to get into November, December, things started to tighten up. And the reason you can see that these numbers look big, but what's really important is this months of inventory. This is such a great example. You can see here we were more of a balanced market heading towards a seller's market. The month of April was truly reflective of COVID, and we jumped, but very quickly the market started to tighten up, and you could see we were heading into that sub 4 months of inventory, as reflected in the overall increasing price points of the benchmark. So that is to give you a little bit of an idea of what's going on. Now, when was the last time we saw these types of low inventories? You can see here, I mean, March was only 1.6 months of inventory. And I mean, it was bananas, and it still is bananas sometimes. But going back, you can see back when the market, we had the mortgage rule changes. You can see here in the red, prices were going down, months of inventory accumulating, but towards the end of 19, spilling into 2020, things started to get better. So we actually are coming out of a bottom, so to speak, or a correction in the marketplace. And the last time we actually had this low inventory goes back to, I think it was 2016, if I'm not mistaken. Yeah, here you go. It was the first portion of 2016 when, again, you can see we had such low inventory and such high sales. You can see what the prices were back then. I mean, it really is such a great example of how well-performing Vancouver is as a market. Now, there's a lot of opinions out there about the current situation, but I just want to also remind everybody that this is a market based on a local market. We do not have any real active immigration going on right now. And it's going to be really interesting to see what happens as immigration is able, the doors open up and we're able to have people come back into this country. We're definitely seeing Canadians who might be living abroad trying to make their way back for various geopolitical reasons, COVID reasons, or just it's that point in time in their lives. But we have had no real immigration coming into the country. So that is one factor that is still lingering out there. And I think all around the world, many people are really like, if they had to pick where they'd want to have been living out COVID, I think a lot of people would want to be here in Canada and specifically in Vancouver. A couple of the things that we are noticing, however, is, back in the last summer of 2020, interest rates were about 2-ish%. 2.9, actually basically where they are today. They dropped down even further and around January, and that is when we got these rates that were sub 2, closer to 1.5% for 5-year fixed terms. This is incredible financing. Your principal to interest in your mortgage is unbelievable, and it totally made sense to take advantage of these low rates. And even today, the bond market has started to strengthen, which impacts fixed term rates. So they've bounced back up to about 2%. And I know that RBC has just increased their rates as well recently, even further, and they're usually the market leader. So if you're thinking about refinancing or getting in the market, make sure you're connecting with your current mortgage professional and locking in those rates. If you're going variable, which is based on the prime rate, you're still sitting pretty around 1.5%. And of course, it's going to take quite a few moves for the prime rate to go up in order to catch up with where fixed term rates are today. So those are a couple things there. I realized I forgot to touch on some specifics for you in terms of market segments. So let's just see here. In terms of prices for April, sorry. So the benchmark price now is 1.152 million. That is a 12% year-over-year increase for your benchmark property. Obviously, that is a culmination of detached and condos all rolled into one. And it's also a 2.6% increase month over month. So keep that in mind. The sales to listings ratio, I mean, we're about a 50% sell-through rate, but it depends. Detached is about 37%, townhomes are 70%, and condos are 51% when you break it down that way. But to get into pricing, because the benchmark rate does not reflect the benchmark price of a typical home or condo. Currently, in April, we had 1,655 sales of detached homes. That is a 326% increase year over year. Just remember that that is going off of April last year when we were in full lockdown. The benchmark price for a detached home in Vancouver is 1.755 million, and it's up 20.9% year over year and up 3.2% month over month. Condos, 2,289 sales in April, up 355% off of last year, of course, off of COVID April last year. And the benchmark price is 729,600, an increase of 5.9% year over year and 1.9% month over month. Townhomes, we did 964 sales in the month of April. That's a 342% increase year over year. Your benchmark price is 900,000 with a 13.9% increase year over year and 3.3% increase month over month. Now, to get specific, for example, a detached home in Kerrisdale on the west side, you're looking at a benchmark of 3.364, and that is up 13.9% year over year. Do the math on that one. West side, overall detached between the $3 and $4 million range, there was 150 listings, 40 sales. So you're looking at 3.75 months of inventory. But if you want to get more specific, take a look at the SnapStats reports that we send out to you, because it does break things down into larger parameters in terms of market location as well as your price band, because it's a completely different market for 2 bedrooms in the $800,000 range versus your $3 and $5 million homes on the west side or even the east side. And we have still been seeing a lot of competition in terms of maybe always not as many offers, but very strong offers on certain product. Another product, not so much. So ready to go homes, lots of space, that sort of thing. Outdoor space has been very attractive, obviously, if you have a view. So with that, I encourage you to reach out to me. And if you want to find out about your specific market, whether you're purchasing or you're selling, and selling is definitely, if you're thinking about it, these markets are very conducive, but you do need to have a plan. I encourage you to reach out to me. Thank you so much for your time, and we look forward to connecting with you in the next report. Cheers.